Hello, and welcome back to the channel. Today we're doing things a little differently. If I had to start my day trading journey all over again, with the knowledge and the tech of 2026, I wouldn't do anything the way I did in 2018. In 2018, it was all about grinding for hours, trying to find patterns manually, and using messy indicators. But the landscape has completely shifted. It's faster now, and the retail trader is under more pressure than ever. So, how would I adapt? My 8 years of experience tell me to leverage automation and data. This video is my detailed roadmap for navigating the modern market using the right tools. This is my 2026 blueprint, the complete stack, from capital to strategy, risk, and psychology. I'm going to show you exactly how I would learn to day trade in 2026 if I lost everything today. Let's get moving. Step 1. Save capital. The reality check. Most traders fail because they trade with scared money. If you can't pay your rent, you cannot make rational trading decisions. Starting over in 2026 means realizing that capital is a tool, not a dream. The hustle. I'm spending my first 30 days entirely away from the charts. I'm hitting the resale markets. Why eBay and Craigslist? Because they are immediate. I'm looking for undervalued electronics or furniture, flipping $50 into $200. The goal, $2,000. Why $2,000? It's the psychological threshold. It allows you to fail a few prop firm challenges or withstand the margin requirements for micro futures. The mindset. You aren't saving money. You are buying your seat at the table. Every dollar saved is a brick in your foundation. Step 2. Find a mentor. The information trap. In 2026, YouTube is flooded with AI-generated strategy videos. If you try to learn from everyone, you learn from no one. The selection process. I'm looking for a mentor who shows a live journal. I don't care about their car. I care about their drawdown. How do they handle a 3-day losing streak? The filter. Pick one style. Are you an ICT student? A supply and demand trader? A volume profile specialist? Pick one and delete the rest of your subscriptions. The objective. You aren't looking for a signal provider. You are looking for a lens through which to see the market clearly. Step 3. The learning phase. The deep work. This is where the eye training happens. You need to see 10,000 candles before you can predict the 10,001st. The curriculum. I'm studying 3 things. 1. Trend. Who is in control? 2. S/R levels. Where did price react violently in the past? 3. Candlestick psychology. What does a long wick actually represent in terms of human fear? The notebook. If it's not written down, you didn't learn it. I'm drawing setups by hand. Manual drawing forces the brain to process the geometry of the move. Step 4. Treat demo live. The simulation. Most people blow their first real account because they played on demo. In 2026, the tech allows for one-to-one realism. The rules. You must trade the demo exactly as you will trade the live account. If your live plan is to risk $20 per trade, you do not risk $200 on demo just because it's fake. The data. Step 5 is integrated here. I am split screening every trade. The winner. Did it hit my take profit, TP, because of my plan, or did I get lucky on a news spike? The loser. Did I follow my stop loss? If yes, that's a perfect trade. If no, that's a red flag. The graduation. You don't go live until you have 20 trades in a row where you followed every single rule, regardless of the P&L. Step 5 and Step 6 are combined. The truth about your journal. Most traders think the work ends when the trade closes. They see a green winner and feel like a genius, or they see a red loser and close their laptop in frustration. If that's you, you aren't trading. You're gambling on your emotions. In 2026, the edge doesn't come from finding a perfect indicator. It comes from data. If I had to start over today, I would spend twice as much time reviewing my trades as I do taking them. This is the post-mortem phase, and it's the bridge between being a novice and becoming a professional. Studying the winners. The good wins. Look at the left side of my screen. We have a winner. But here is the million-dollar question. Why did it win? Was it a good win, meaning you followed every rule in your plan, entered at your zone, and held until your target? Or was it a lucky win, where you entered on a whim, moved your stop-loss because you were scared, and the market just happened to bail you out? If you don't study your winners, you'll never know how to scale. You need to identify the specific market conditions that lead to your highest win rate. Is it a specific time of day? A specific type of reversal? Capture that data. You want to be able to look at a chart and say, I've seen this winner 1,000 times before. Studying the losers, your greatest teacher. Now, look at the right side, the loser. Most people hate looking at these, but this is where your true growth is hidden. Every loser falls into two categories. 1. A statistical loss. You did everything right, but the probability just didn't work out. These are good losers. You embrace these. 2. An execution loss. You entered too early, you chased the move, or you traded out of revenge. These are the system killers. By split screening your winners and losers, you start to see the patterns. You might realize that 80% of your losers happen on Mondays, or that your winners always have a specific volume signature. In 2026, we don't guess. We analyze. The action plan. Your homework for step 5 is simple. Go back through your last 20 trades. Put the winners on one side and the losers on the other. Find the one common thread in your losers and cut it. Find the one common thread in your winners and double down on it. Stop focused on the P and L and start focusing on the Y. Master your data and you'll master the market. Step 7, process over profits. 1. Stop. 2. Hold. 3. Plan. Finally, we hit the most important lesson of all. Process greater than profits. Look at this board. 1. Stop. This is your life insurance. If you don't have a hard stop loss, you aren't trading. You're gambling. 2. Hold. This is the hardest part. It's the discipline to stay in a winning trade and the patience to stay out of a bad one. 3. Plan. If you are clicking buttons based on a feeling, you've already lost. In 2026, the smart money is looking for emotional traders to provide liquidity. When you follow a strict, boring, mechanical process, you become the house instead of the gambler. Remember, a good trade is one where you followed your rules, even if it hit your stop loss. A bad trade is one where you broke your rules, even if you made money. Master the process, and the profits will eventually find you. Finally, I'd study market structure. People say, the trend is your friend, but they don't tell you the trend is often a trap if you don't know when it's ending. Master market structure. By now, I'm back in the live markets. I'm ignoring the 1-minute noise and focusing on higher highs, lower lows, and reversal zones. This is the matrix of trading. Once you see the structure, you stop being a gambler and start being a house. You're looking for where the smart money is trapped and where the liquidity is sitting. The 5 pillars. I'd focus on recognizing these 5 states in real time. 1. Trending. 2. Ranging. 3. Breaking out. 4. Pulling back. 5. Reversing. The power of no. Knowing when the market is about to reverse allows you to say, I'm not taking this trade. That's just as profitable as a winning trade. The recap and action plan. To recap, save your capital, find an expert, Respect the learning phase. Treat the demo with respect. Study your data, focus on the process, and master structure. The market will always be here. Don't rush. Subscribe and comment your takeaway in this video for more. I'll see you in the markets.